Hi there, I'm Dean Heskin. Thank you for tuning into our podcast, The Secret War on Cash. I'm President and CEO of Swiss America Trading. And as we've been bringing this podcast to you now for a couple of years, we look at different changing dynamics in the financial markets and the economies, not just domestically, but abroad as well. And really, actually, anymore, the difference between what's happening domestically and abroad, it's kind of a fine line because everything seems to be just kind of growing and melding more and more together as each day goes on. And as Chris Agelastos, my co-host, is here, we're going to talk about something we've been covering for these last couple of years, which is BRICS and this growing alliance that, as we started talking about it, BRICS has been around for a few years. I think technically it was started in, what we covered this before, Chris, was it 2001, and then it kind of like it was very docile, very quiet, and then it maybe in 2011ish or so started.
Yeah, 10 or 11 is where I think it really started picking up steam.
Okay, and then but it was just over the course of the last few years where it's been like pedal to the metal, like full steam ahead.
Yeah.
And as we talked about, we're we I we're kind of behind the curve because it really wasn't until President Trump was voted into office that really he started, confronting BRICS head on. And
Mhm.
necessarily so because the whole motivation with BRICS is this whole de-dollarization effort. They've said it in different times, different people, they're trying to dethrone the US dollar. So
Yeah.
we look at this first article here, Chris. Pakistan is expected among BRICS new members in 2026, despite resistance.
Yeah.
And, it's really interesting because that's what to me has always been one of the more concerning aspects, let's say, about BRICS, is that it's not just like a petition that's being signed by nations. Yeah, we want a better future. We want a more stable currency. It's not a petition. There's actually a whole vetting process that goes on here.
Hmm.
And as they talk about in the first paragraph, the Pakistan, is expected to be confirmed. So, it just shows that there is a very careful, deliberate process involved here with bringing these nations on board. And as much as Trump has, we've got the trade war, we've got the tariff war going on, and he's doing what he can to try and maybe slow this runaway train down a little bit. It really just doesn't seem to be happening. And so as we look at this,
Yeah.
like, for those who are tuned into this podcast, tell us a little bit about what Pakistan is bringing to the table, and if you can elaborate a little bit on
Hmm.
why there was maybe a little bit of resistance there as well.
Yeah. Well, India seems to be, at least historically, the biggest country against Pakistan's membership, and India and Pakistan have always had a bit of a contentious relationship, and I'm saying it that way is actually being a little bit nice. Um, but what they've really done, and you touched on this, is joining BRICS is really more like joining a club with some common interests. And yes, they do vet very carefully who they want in there. And they also have different levels of membership. They have members that can, um, I would say, maybe more like a social member, sort of participate a little bit in some of the activities, but not have voting rights. And not have all of the benefits of being a full member. And what they're talking about doing with Pakistan here is actually making them a full member, which will take them from 11 currently to 12 full members. And they also have many other applicants that are waiting for that same benefit, if you will. So it's hard to say how many more they'll have next year and the following year, but they have been consistently growing. And really, what Pakistan is going to do, or what it's going to do for Pakistan, I should say, it's going to give them a lot more foreign investment opportunity. So it's going to pull in more money from other BRICS nations for Pakistan, which is great for them. Give them some more trade diversification. It will help them advance some of their industrialization and digitalization, AI, things like that. So those are all benefits for them. But Pakistan themselves, where they're located, they are sort of in the position to be able to link South Asia, Central Asia, and the Middle East. And so there's sort of a gateway, if you will, to these other areas of the world, and that's going to benefit them as well as other BRICS nations. So it appears as though India is willing to look at this and say, while we may not agree on plenty of things, we do have some common goals here, and it's worthwhile to have you in the organization. Plus, add to that, you're really getting a big push from China, Russia, and other BRICS nations to bring Pakistan in. So it looks like at this point, India is going to be on board with it.
Well, and I think a really important point that you kind of touched on there, Chris, is that how, what Pakistan gains and other nations as they have, joined this alliance. And keep in mind as well, there are a lot of nations that are not officially officially part of the BRICS alliance per se. But remember, it
Mhm.
was, what was it, less than 6 months ago, I want to say, where BRICS kind of opened up like a quasi partnership with several
Mhm.
nations as well, where they gave them access to some of the BRICS benefits. And the reason I think that's really important is because as we've been watching, what's been happening with, using as an example, the tariffs have been used to try and slow things down. President Trump has been saying, listen, if you don't start doing things to help strengthen the dollar, or strengthen the trade relations, et cetera, then we're going to retaliate in some way, shape, or form, which in many cases has been higher tariffs. But the bottom line is that as much as that's really the direction Trump has to take, at the end of the day, because they have different inroads to different trade with different nations, it kind of lessens that blow to a great extent. Number one,
Yeah.
and number two, the obvious question becomes, as much as we'd like to say, okay, we're not going to trade with you because you're doing this, is there, how much reliance do we have on trade with that nation where it's not something we can really, let's say, cut them off, if you will. So as we
Right.
look at that, and now looking at this second article here, how China is looking towards gold and this asset class as U.S. Treasury holdings continue to fall. And for those of you who are newly tuned in here, this has been an ongoing issue where the U.S. Treasury auctions have been very quiet in terms of participants. There are people who are, as they're part of when we talk about unloading dollars, what that consists of is, part of that unloading is either not buying treasuries or unloading treasuries. And in all honesty, Chris, as I saw this article,
Mhm.
before I read it, what I automatically kind of jumped to in terms of a conclusion, I'm like, oh, it must be cryptos. Okay,
Mhm.
that was my default. And then as soon as I got into it, I was like, oh my goodness, holy smokes, it's not cryptos. You're talking about European bonds and currencies.
Yeah. Mhm.
And why that's why that's very concerning is that, if you look at a treasury and what traditionally they've represented in terms of stability, safety, things of that nature, and replacing that with a crypto, which that's been discussed, other people have done that, if you will, cryptos or stablecoin or CBDCs, et cetera. That's that whole discussion.
Yeah.
But when you get into that realm, it's kind of like comparing crypto to gold. There are market similarities, but there are very fundamental differences between the two asset classes.
Right.
And the same thing applies with cryptos as you relate it to treasuries. But when you look at what they're looking at is European bonds and European
Yeah.
currencies, unfortunately, that is a viable alternative, if you will. And we
Right.
covered this a couple of podcasts ago, where what just took place is, in terms of reserves that people have, national reserves that held throughout the world. The number one has been the US dollar, number two had been the euro, and number three had been gold. And gold just moved ahead of the euro.
Yeah.
But you look at something like this, if China, and then China being part of BRICS, and we've been hearing all kinds of news recently about the Wuhan. You say it better than I do. The yuan,
The
the yuan,
yuan. Yeah.
the yuan. I would say the yuan, but the yuan, um, and how much momentum it's been gaining in the global marketplace. The this literally could be where we might have gold, the euro, and then the dollar, or we could have, the euro, gold, and then the dollar, or Lord only knows, because if there's enough of abandonment, we could see the dollar dropping considerably from here. So this
Yeah.
is where, to me, this seems like a very concerning shift or move that they're talking about.
Yeah, and we actually were talking about this in the last couple of weeks here and there, and I've had one or two people, clients or people listening to our program, comment that we were being a little anti-American because we're saying that foreign countries are less interested in investing in the United States, and that's a little anti-American to be saying such a thing. And don't get me wrong, that's not what I want to happen, but we
Sure.
have to look at the numbers and report what is going on. And in fact, China sold 26 billion in U.S. Treasuries in July, in 1 month, lowering their holdings to a total of 730 billion, which, while it still sounds like a good number, that's the lowest they've held since 2009. So in the last 16 years, they're at their lowest point of investment in the United States. So I mean, that's a fact. And that's a
Right.
45% drop from their peak in 2013. So it is a significant number, and they are shifting towards gold, as we've been talking about for a while, to help protect the yuan from inflation and depreciation. But again, all these European currency bonds, that's really where, if the trend continues, the euro and gold are both on a climb right now, and the dollar is falling. Now, the dollar still has a big lead. So, again, don't get me wrong. We're still overall in a good position, but we're not in as good of a position as we used to be. And unless the trend changes, I think your comment is right that the U.S. dollar can very easily at some point here fall to number two, maybe number three, and hopefully no further than that. But but honestly, we don't want it to fall at all.
Right.
And anything they gain, that's the other thing too here. When people say, "Well, look, BRICS isn't going to win," well, any gains that BRICS make is a win for them and a loss for us. So maybe not the whole game. Maybe they're not going to take over and be number one and replace the U.S. dollar completely. But everything that they gain is inches on the field that we're losing, and that's not a
Right.
positive thing for the United States. So I think people need to at least look at those facts and kind of accept the reality of it, and obviously do what you can to protect yourself. But look, knowledge is power. That's why we're talking about these things, to let people know what's going on so that they have the information they need to make decisions.
Right. Absolutely right. And yet, at the end of the day, you, I, none of us want this to happen. But to your point, it is happening. And
Right.
as it's happening, I mean, and again, I do understand I do understand where people are coming from when they say it sounds to be anti-American, because, point being, if we're going through a struggle or a time of weakness, let's say, we do want to unite, we do want to show solidarity, we do want to show strength.
Yeah.
There is, however, though, that reality to what's, as this dollar has been dropping in value, the households and families out there who are paying exorbitantly more at the grocery store, that are paying exorbitantly more at the pump, or
Hmm.
their fuel and energy prices. That's just the stark reality of this situation. We're 100% supportive of the United States, the US dollar. We want to see our country thrive. But I do think even those who may say to someone like you, someone like me, like, oh, you guys are being anti American, I do believe we would be united in so much as saying that the problem is our not President Trump. Our problem has been a years and years and years of mismanaged finance out of Washington. And
Yeah.
until somebody fixes that, and part of the problem as well, we've got 36, 37 trillion dollars worth of debt right now, and we're incurring $1 trillion a year in just interest on that debt. It's
Yeah.
become unmanageable. It's become unsustainable. And so at some point, something has to give and something will give. And we just want to make sure individual families are doing what they can to still be supportive of the United States, but also be supportive of the fact that what you can do to diversify yourself and get your family in a position where you're not going to be, devastated by inflationary pressures or perhaps some kind of problem that may occur with the US dollar. And if you want to
Yeah.
learn more about that, contact our office, get a copy of our secret war report at 1-800-289-2646. You can learn more about that. You can text us as well at 1-800-289-2646, or visit us online at www.swissamerica.com. Chris, why don't you tell everybody goodbye and thank you for all the information.
Take care, everybody.
Thank you so much. Thanks for tuning in. If you're not subscribed, please do so. We look forward to talking to you soon.